Big market swings as big tech earnings loom. Welcome to Market Insight. I'm David Pollard. Despite today's gains, risk-off seems to be sentiment as stocks retreated from their record highs earlier this year. Up next for investors will be earnings by four of the biggest stocks on the market: Amazon, Microsoft, Meta and Alphabet. So to help us navigate this week's earnings and more, I'm now joined by Keith Gangle, Portfolio Manager at Gradient Investments. Keith, welcome. Many thanks for joining us today. Now, in your notes, you say the market is oversold. That might be a bit of a contrarian view given the current situation and valuations. Why do you think it's a bit oversold?
Well, I think just in the short term, it's getting a little bit oversold, right? Let's back it up here a little bit. We look at year to date going into the first quarter, the S&P 500 was up over 10%. Now, the last 3 weeks, the markets are actually down almost 6%. So they're only up 4% for a year and a half, year to date to start. So that's what I'm talking about with the correction. So I think we're due for, that market's getting a little bit oversold here. I think we'll see here a bounce. But the main thing we'll have to be watching this week, obviously you touched on, is earnings. And we see some mega cap earning companies that have been driving the market for the last year and a half. So we'll see how they report. And if they report some nice numbers and give decent guidance, I think we can see a little bit of a bounce back here in the market. But I think if we look out to the year end, I think the markets will grind higher, but I don't see them substantially higher. We were forecasting that 10, 11%, and we had that in the first quarter, and now we pulled back, and I think we can get back to there and plus a little bit more.
Well, the earnings could kick off with a bit of a bang tomorrow with Tesla. It reports its share price has languished amid disappointing deliveries and, of course, price cuts over the weekend and previously. It's still the world's largest car maker by market value, but where is the upside? Is there any upside?
Yeah, this is a name we don't currently own. We're kind of more in the watch camp here. We didn't own it last year when the stock doubled, and then obviously it's been selling off. There have been a lot of issues, supply concerns. EVs in general, I think, have been selling off pretty aggressively. I think there's starting to be a shift in the mindset of investors and drivers is instead of just focusing on EV, looking at hybrids. Look at Toyota Motor Companies. That company's been doing phenomenal. That's got the hybrids. So I think there's been a shift. And obviously, you've seen the price cuts you just announced. You've seen potential layoffs. They're talking about 10% of their employees. Generally, when companies are laying out their employees, something's slowing a little bit, and so they got to readjust. And that's what kind of phase we're in now. So we're in the more in a wait and see and kind of what they report and kind of how they give guidance going forward. The stock is still not cheap, and that's been our biggest holdback the whole time, not owning it.
Now, AI, obviously a dominant theme in this earnings season. Microsoft, Meta and Alphabet all considered AI plays, but perhaps realistically, Microsoft is still a software company. So what's your view on that stock?
Oh, for sure. Microsoft's still a software company, but the potential growth driver has been AI, right? You've got Azure, the big cloud, that's supposed to grow 28% this year, and that's 6% of that is driven by AI kind of investing. So that's still, the driver, overall technology and software, but that AI is going to be the next leg of drive, growth going forward. So we like it as an AI play as well.
And of course, Meta and Alphabet a little bit later in the week. Meta's been in the news in the previous earnings quarters over its digital ad spends, and to a degree so is Alphabet. What are you looking for in these earnings?
Yeah, for Meta, we're looking for a big quarter. We're looking for like 95% year-over-year EPS growth. Think about that's pretty amazing that a company that size can grow their EPS. But if you go back a couple of years, they struggled. So now they're in an inflection point. Things are going very well. They're tied to ad spend, which is doing very, very well. They're right in the sweet spot right now. They got obviously they're talking about Meta AI as well. That is kind of a little bit underplayed. So we think as they talk more about that, that'll get a little bit more high of an AI multiple. On top of that, you're starting to hear, the TikTok ban. That could also be a potential benefit down the road for Reels.
It's also a big week on the data front for the economy. We've got PMIs tomorrow, and then towards the end of the week on Friday, we've got the PCE price index, the Fed's preferred gauge of inflation. What are you looking for there? Possibly not much upside, but a lot of downside risk.
Yeah, you nailed it. I mean, obviously the street forecasts are looking for about 2.7%, but that's actually a step down from last month. It was only at 2.8%. So directionally, that would be a good thing. That's kind of, if you flip back to earlier in the month, we saw the CPI number that actually ticked up. And that's what spooked this whole market to start with, is when inflation ticked up, people worry about the Fed would not cut as much. So if this PCE number could come in that 2.7, maybe even get a 2.6 surprise to the downside, that would be a nice catalyst for the market to move forward.
Okay, Keith Gangle, Portfolio Manager at Gradient Investments. Many thanks for sharing your thoughts today. That is your Market Insight. You can watch more videos at Reuters.com.